Good afternoon, Scott Redler, TV Live. Welcome to today's recap. So this is day 2 of a pretty controlled pullback. I just want to say for myself, I apologize. I haven't been here the past 2 days. I've had some obligations I had to take care of. I'm just going to say it once. Had a big exam, passed it, done, behind me. You'll see a lot more of Red Dog consistently back in the morning call and the recap, updating charts, everything that I've done all my career that I've done on a consistent basis as a creature of habit. I am back now and will be doing stronger and better than ever before. As far as back to the markets, all I'm telling you right now is we've had a 2-day pullback. Lots of moving averages started playing catch up. The gap from last week are still intact across the board. I hear a lot of belly aching all around saying, oh, the pull into this, to that. Meanwhile, you look at the chart of the indices and really no damage. You just have to be realistic. This was the first day, or this was what, that Monday going into New Year's. This was your gap up. And, it is somewhat frustrating, I'll be honest, when you have 2 days, and in those 2 days is primarily the entire move, okay? But, within this time period of consolidation, this is when, depending on your time frame, you start looking for quality longs. And everyone has different time frames. Now, strong markets follow their 8-day moving average and their 21. So if you look at the 8-day moving average from the gap up from November 16th, it took some time after this gap up for it to play catch up, and then it followed the 8-day before correcting a bit, got back up, and now it's back in trying to follow the 8-day. So all that's happened in the past 4 days is the 8-day played a little catch up. We're consolidating above this gap. Depending on your time frame, you have a nice little point of reference here. Okay, the gap here is 144.73. So all in all, still very constructive. If you want to take it a step further and use your Fibonacci retracements, you can go from the low here all the way to the high. So measuring the commitment, so to speak, to the low that was put in on New Year's Day, we're just at the 25%, which is still a very pent-up, strong market. Here's your point, 382, which would still be a very strong market, which would be 144 in the spiders, which would mean that we'd push into the gap. So I would say if we do break the gap and come in and test this a little bit more, and fill some of it and go sideways, look for some type of reversal type trade. Don't just buy into this gap and continue to buy, measure the strength across the board, and at this point, stay with intermediate trend longs. The intermediate trend is fine. As an active trader, you're probably pulling your head out a little bit unless you're micro scalping, but as an intermediate trend trader, you're doing just fine. Lots of stocks well above, the 8 to 21 day. You go back to the chart I've shown a few times in the weekly, trending higher. If you're a macro investor, if you have a macro course, low, higher low, higher low, higher low. I'm going to have a broken record here. Higher low, and then here you are. So there you go. We're coming into, that area of last September that's going to be a little resistant. So all in all, still looking very, very healthy. Have these measurements written down in front of you. The longer we stay above this gap and above the 8-day, if we go quickly, that's how fast the speed's going to be, and that's all going to be, a question of how the earnings come in. And at this point, I can't see us having such a robust earnings season, to be honest. Think about the things we had to deal with coming into the end of last quarter. Whether it was Hurricane Sandy, whether it was just the mood of the market after the election, and then after what happened in Connecticut. So who knows exactly what the earnings are going to be. So you really have to measure your commitment. You have to know what the street's looking for, where the stock came from, where it's trading, and whether or not you take stocks into earnings, or whether you don't. Some guys will take stocks into earnings. They've been holding it for a year, 2, 3 years, and they don't care if they get a gap down, gap up, because, they trade around it and it's fine. That's their risk tolerance. If that's not you and you have a trading account, you hold 5, 6 positions, and you don't want to be caught in a 3 to 7% gap down, you know what? You take options into the earnings, or, you don't take it. And then you wait till after earnings, and then sometimes we get a lot of good trades after that. But we're not getting into the meat of, the real earnings plays that we play. Alcoa's after the close. Doesn't mean anything. Maybe it might mean something with the futures tomorrow. But really, the banks that are starting on Friday with Wells Fargo, and then, the meaty stocks that are going to start coming out next week, that's the real earnings. If you want to take a quick look at the sectors, we go to just say some of the sectors that have been leading. The home builders still looking really good. Home builders above Okay, the recent pivot. Look at this. The home builders are still above the 8-day, not even moving up to there. People are like, oh my God, the home builders, whatever. 2 inside days. Okay, consolidating. This is giving you a time for charts to rebuild. Let's take a look at the financials. XLF. Look here. I didn't even draw this, and someone else did a good job here. Here's your gap up. A little bit of follow through a few days back. 2 inside days. Above the 8-day, above the 21-day. That's very healthy. Look at this last trend. For those that micromanage it, holding up very well. Followed the 8 and 21-day since almost November. Okay, and the 8-day even more recently. So with a big gap up like this, you have pent-up momentum, sideways action's fine. People were tweeting me today, oh, look at your Bank of America under pressure. Are you kidding me? Okay, first of all, we started talking about Bank of America over the summer, okay, and that's where that Bloomberg video came in, and that came in when it broke above this $8, and that's when we did that call spread. Nice little move. Then you had the consolidation again, where it held higher. Okay, so this was a nice little swing trade from 970s or so, adding through 10. Then you had another bull flag, okay, and then you had a little bit more time. This is when I think everyone on the street started getting bullish on Bank of America. Not here, not there. Probably around maybe some smarter guys here, but around here. So right now, what do you have here? The 8-day catching up. Okay, can this 8-day break and can it pull back to the 21-day? Probably. Okay, if you're an active professional trader and you want to short this area and you think you want to be cute, and you're not a macro investor and you don't want to hold it, fine. Okay, a lot of guys are going to do that. For me, I'm not getting out of my Bank of America unless it breaks and closes below the 21-day. I have a very light position now. I'm trading around it. Like, again, example, tier 1, tier 2, sell some, trim some, trail some. You hear me talk about that all the time. Tier 1, tier 2, sell some, trim some, trail some. Here it got stronger again. Buy some, trim some. And now I'm in a very small position, and we'll see what happens here. Because if you do sell it here, okay, there are a lot of guys that are saying to themselves, like, look at YHOO. They're like, oh my goodness, Red Dog, how come you didn't get out of your YHOO? All right, first of all, it was a really nice trade if you talk about the breakout from 1660. It followed the 21-day all the way up. Yes, was this a short-term top? As it gapped up, the market didn't pull in, it closed off the highs, a little bit of an exhaustion move? Yes. Was it confirmed the day after? It was. Okay, but what did it do? It caught the 21-day. Okay, what did it do here too after this move? 8-day, caught the 21-day and continued. So if you did sell above 20, and I trimmed some above 20, and I tweeted, I said, trim and trail, trim and trail. Here was your buy as it broke out, there was just selling to excitement, and now you figure out what's next. So if you did sell some, a lot of people say, oh, I just sold some, I had a great sale here, because I fell into that one time. I think I had a little bit of the same problem where, after this move, I sold some into this move, and guys are like, Red Dog, you were right on the money. But you know what? I did not buy back into this. Okay, I wound up, I think, buying back right when it cleared this area. So if you did sell, and you're an active trader or you're an intermediate trend trader, and you're like, okay, I sold it, great. Okay, and if you don't find your buyback, and look, a nice green day filled this gap here, so that's nice to see. Okay, so it's still showing you people buying the dip. Okay, if you turn around in 2 months from now and you look at your monthly chart, okay, or it could be even 6 months from now, so to speak, okay, if it's a year hold for you, if you're a macro holder, and you don't buy back and it gets to 23 to 25, how well did you do? That means you didn't trade via your time frame. Okay, you need to know what your time frame is. Active professional traders could sell some strength, buy some back in here and then figure it out, let it go sideways, and then maybe it continues. If you're, if you have a career out there and you're a doctor, a lawyer, a teacher, whatever, you're a carpenter, and you're like, I want to hold YHOO for the year, and you sold it here, and then you forget about it and it goes, you never bought it back. Okay, but then that goes to another situation. Okay, I wasn't here yesterday when I guess the Boeing news came out. I didn't even read into the whole thing. I was stuck in my 24 book, going back and forth, back and forth. I didn't even turn my phone on this morning. And, if you look at what happened here in Boeing, just as far as the chart, this is something you have, this is a commitment measure, okay? As a trade, it was a nice trade if you got long going into, the first day of the year when it closed strong, okay? And then, I don't like when things break out and fail short term. You break out and fail, it's broken and needs time. The momentum's not there. I'm a momentum trader. I never really bought Boeing, which you would have seen on my virtual trading floor, because I'm not that familiar with it. I didn't feel like sitting in this thing for a year. Okay, it doesn't move quick enough for me. From 77 to 82, that's what the objective was. So anyway, yesterday it engulfed this 3-day breakout. So if you are risk averse and you're not looking to sit in this thing for a while, that was your sell signal, because look at the power of this bar versus here, and then you didn't have to handle this, second day down. But if you're in it because you like the chart, you like the story, okay, and you see this overall channel, okay, right now, because of what's going on, it broke out, didn't have enough news or fundamental whatever behind it, or it's emotional, and came back in. So unfortunately, you might see this thing trade for a while back in this channel. So at this particular point, if you're still in it, I would trade versus today's low moving forward if you're uncommitted. And if you're committed to it, you just got to put it on the side and let it go, guys. Look how long it took Walmart, to trade in this weekly channel. Okay, I know that we caught it well last year as far as, people did this channel for 10 years before it finally broke out. And for me, I saw it trading up. I saw it near the highs here. I put 1 + 1 with the way the economy was, Walmart target, blah, blah, blah. I said it breaks above 62. It could see 72 to 75. It happened. But if you traded the noise in here as a long-term macro investor, or even as an intermediate investor, you might have sold it here, not got back into the weakness, and then you missed this move. So you need to figure out, what type of investor trader are you? Are you someone that sits in a decade-long move, because it just consolidated from a move from 10 all the way to 80? Or are you someone like me who likes to play when in the time is exactly right or close to exactly right, where it breaks above a certain level, holds above a certain level, shows commitment, and continues? Right now for for Boeing, okay, it tried, because if you look at this channel, look, it still looks fine on this level on this chart. But if you go to the daily, as far as short term, it tried, okay? It tried to break above, and it didn't. So when it doesn't break above and momentum leaves, if you're an intermediate momentum trader, you leave, and then you wait for the story to plan out and go again. If you're a fundamental guy, you probably say, oh, I'll buy a little bit more here, maybe I'll buy a little bit more in the bottom of the channel, and I'll sit. That's not the way we typically work here. That's not our sweet spot. Anyway, as far as we were just talking about Bank of America and the banks, you look at JP Morgan. JP Morgan didn't really pull in, okay? People are worried if the markets or the rally is going to continue. JP Morgan closed near the highs, okay? If you guys remember, we were talking about it in this area. So if you went with JP Morgan, it's still acting very well, okay? Same thing like just say Bank of America was hugging the 8-day the whole time, okay? And then it pulled in to, the 21-day, and then it continued. So if you sold here and you're like, oh wow, I sold into strength, I'm the best, and you're a swing trader and you didn't buy back into the pullback, and you're like, oh, look how good I did. Look at this. It pulled in, 70, 80 cents, and you didn't buy back on this day when it engulfed it and looked better, and you're looking at it now, you're like, oh, how do I get back in JP Morgan? You didn't trade via your time frame. If you're an active trader and you buy a breakout, you bought here and then you got paid here, that's different, okay? Or if you bought here for, seeing this range look like it's going to get resolved, and you wanted to put on a day and a half trade, here was your flag, closed strong, you got your gap up, and now it's continuing above that, and it's giving you no reason to get out of it. So again, all different time frames. Amazon got upgraded, I think it was yesterday, gapped up. The stock was acting the best in high beta land. I know that I don't trade Amazon that well, but look where it is, guys. You go to the monthly chart, historic highs. Equities are not dead. You could be a stock picker. Lots of little areas where it broke out, held, continued. Look at this little, downtrend, broke, tested, continued. Now you go more to your daily chart, which is more of the place that we, live, so to speak. And if you look here, you will see that, above the 8-day, above the 21-day, above the 50-day. This was the first stock back in November that once it cleared this descending channel, it never looked back. I know some guys, oh, this is another example, okay? Watch this. Remember, guys were playing it for a breakout right here, okay? I know a lot of guys were. I think guys in my office were looking for a breakout from this flag pattern through 260, right? Here's the highs, because stocks that break out above 52-week highs typically continue. And then look what happened, okay? I remember talking about it. I'm like, use 255 as your stop. Some guys use 255 as their stop, and we're holding it all the way from here. As an intermediate trader, I said, wow, Red Dog, you were really right, thank goodness. And when it was down here and it looked ugly and it was breaking this support, okay, they were like, oh, I'm glad to be out of the way. Let me turn away from Amazon. Then boom, held the 50-day, engulfed this lower range, continued, closed strong above the 8-day, now it's at highs. So if you did sell it when you broke the stop here and you never re-entered, you just missed this move. So again, time frame analysis, where do you live? What are you looking to get out of these stocks? If you bought it here or you bought it here, yes, this looked like definitely an area to get out of. Okay, but actually, if some guys, if you would have sold 255, you might have said, I sold 255, correctly as this upper stop got triggered. You know what? It's getting back above the support range. It held the 50-day. It's clearing a 2-day pivot. Let me buy it back here. At 249, I saved myself $6 if you're really maneuvering this. And then boom, closed pretty well, a few days back. So if it closed well and it was one of the positions of your 5, 6, 7, 8, 9 longs, you were rewarded with a gap up above the prior highs. And now it's holding here. So now let's see, how long it holds above before it potentially goes again. But again, time frame analysis. It's very, very important. Knowing your risk, knowing where you live, knowing if you could really hold on to something, or if you're kidding yourself, or if you think if you want to stay in something and you get scared out of it, or even if you sell it right, like selling it right, 255, because you never know what's going to happen. We didn't know what the market was going to do. That was just your stop. You didn't know the market was going to grab its composure. Physical cliff was going to get resolved. Stocks were going to gap up. We thought we'd have a bullish year for 2013. You just didn't know when it was going to start. Okay, but you had to be aware that this is one of the go-to stocks, and if this starts to act better, you give it a try again. Now, as far as Google's still acting better than some other high beta names. All right, last time we talked about a nice pattern was when it started to rebuild down here, this descending channel after a big earnings miss, I would say, or a disappointment. It takes time for a stock to regroup, to repair, and then this is when it broke above this 675. And then from there, it's been stair-stepping higher, not a lot of momentum, so you don't hear a lot of traders talking about it. But at this point, held the 8-day today, flagging again. This was your prior pivot and went above, held it. Next in motion thing you'll probably hear me talking about is 741.47, and then you're right back to the highs. And key point last year, I remember, Google, just so come back to me, Google was video guy, come back to me. All right, he might be sleeping back there. Anyway, basically, Google was my high beta tech stock of the year. It broke out in the beginning of the year. The reason I liked it, obviously, some fundamental reasons, but because of the chart pattern. But the chart said it wasn't ready. So if you're a short-term or intermediate, market timer, if you look back at the chart here of Google, the reason why I really loved it was, let's continue to go back here, was also this channel here, okay? The channel that perhaps was going to break to the upside. So as we entered 2011, here was a faulty breakout right here. Okay, I remember it because once it failed, everyone was like, Red Dog, your stock pick of the year, not doing so well. What are you thinking? What are you going to do here? Okay, so that was right here. Okay, and if you look on it on a short-term basis, I remember it because I was in it. You look here. Let's show you. It held higher. It broke out from 640 and had a really nice move to 670. So it was like a 30-point move with a gap. But what happened? A breakout failure, almost like what happened with Boeing. Breakout failure, went below. So as a short-term trader that didn't want to deal with it, you probably said, I'm going to get out of the way, rightly so, because that's what I did. I said, it needs time. It's not ready yet. It tried to break out. No momentum came and failed. Then, tried again, failed. And then finally, later in the year, okay, after it had a nice earnings report and the street said, okay, we like it now, that's when it triggered above this area. Remember when we drew this little descending channel right here? And then it wound up running all the way to 777, which was above the 750 target. And then since then came in, you could almost say that it retested this zone, pushing through a little bit, and now it's coming on its way back. But if, just the moral of this story is here, it was a good active trade. And then you got stopped out. You're like, okay, I'm glad I'm stopped out. But if you were just a macro investor saying, I'm going to stay in Google, and you didn't want to maneuver the ranges, or at least you maybe used a 200-day as your line in the sand that broke below, and you didn't get back when it reclaimed the 200-day, you missed this move. So again, you have to analyze the time frame you're trading. Are you trading 1 to 3 days? Are you trading 2 to 4 weeks? Are you trading 1 to 3 months? Are you trying to hold something for the year? Or is your rule that if you break the 200-day and you don't reclaim it in 2 days, you're out of the way until it reclaims the 200-day? Are you more of that with the 50? My typical thing is when stocks are trending, I like to be in it when they're in motion, when they're hugging the 8-day and bouncing off the 21-day pretty fast. So I will stay in a lot of the swing trades that I'm doing that I like that are quality besides trash for treasure trades or 1 to 3 day trades or whatever, that are doing that. So at this particular point, there's some doing it and some not. And I'm not in everything. Again, for the last 4 days, I've been detached in La La Land trying to pass this thing, which I did. So now I'll be more active. Guys are asking me about Apple. To be honest, Apple still doesn't look great. It doesn't look like it changed much. Last time I did a video, I said, what kind of Apple are we going to have coming into the new year? Okay, if you guys remember, that was right here. Okay, you had a nice gap, or not even a nice gap. This is when it cleared the descending channel. Gave you a little follow through. And then I said, if it breaks into this gap, which at the time was 541, and can't hold and go sideways, something changed. Or something didn't change, meaning it's still weak from when you had the left shoulder, the head, the right shoulder, and it went lower, and then it couldn't rally here, and then it couldn't rally here, and then it came back after this red dog. Came back after this red dog reversal, and couldn't get back above this resistance, and failed at the 200-day. You know the scoop here. So anyway, when it broke below this 541, I said, you know what? Stock's not showing commitment, either am I. So I was out of it. Plus, I also didn't want to have to watch it so close because, again, I was going to be away from my desk. So I knew my brain power. If I was in this thing worrying about it, I wouldn't be studying what I had to study. So anyway, here we are. I'd say the longer now it hovers below this 531-ish and goes sideways, the more bearish it's going to be. If it comes back down to this danger zone, 1, 2, 3, it's held it 3 times. I don't know if it's going to be able to do it again. I'm in very, very small, just a feeler. At the end of the day, guys got a little excited. I got home from my test. I was like, you know what? Let me try it. On a short-term active basis, I guess there was a reason. Some people, you saw this little descending little channel here that wound up breaking to the upside, but it was really nothing. So that's, again, time frame. Some guys made $3, right? Went above 525, went to the prior high. Maybe you added a little bit here, saying, wow, we're getting above this pivot right here. The next pivot's all the way up there. You bought here, you added some here, you sold some into some strength as it cleared highs, as shorts covered. And then as it came back in the base, it just proved that it's really, nothing. So nothing from nothing, just a trade. And right now, Apple seems to be just a trade. And unfortunately, until that changes, you shouldn't change. I know it's Apple, and I know everyone says you have to give it a pass, but people have been giving it a pass since the high at 703, where it hasn't been able to hold the moving average, where it's been lagging the market versus leading the market like it did in the past. They're getting hurt, and they're not getting paper cuts trying it, and they're in a place where they're like very upset or worried what happens if the street doesn't welcome this earnings or the guidance, and it breaks 505 and it closes below. Do we see 440? So it's a very iffy situation right here with Apple. So for me, I'm not going to try and predict it. I'm going to trade the action, and usually the action predicts the movement, and I'll have a clearer picture once the stock shows us a clearer picture. But for right now, looking at the action doesn't look so great. Very heavy, more sellers and buyers, not leading the market, not doing things that Apple used to do when we used to try and stay with it and hold it and trade around it, and that where it hugged the 8-day, hugged the 21-day, made it real easy. Right now, it's making it very hard even for Apple bulls to be long Apple. So we're just going to trade it when we get to earnings, which is I think the 23rd. So we still have some time here. Then we'll figure out where it is and how to potentially get involved with some type of strategic, perhaps option play. But till then, just going to trade the action back and forth and watch the price, see what goes on there. We're using pivots and stops and no opinions. And that's how you should approach the entire market. But again, the most important thing here is know your time frame. Know where you live. See you tomorrow morning at the morning call. Have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.